Cobus Loots is the CEO of Pan African Resources. The company's just been admitted into the FTSE250 after moving away from the AIM market onto the main board recently. It's been an amazing year for Pan African, especially with the gold price running so high. Cobus, it's really great to see you today. How are you doing?
Good to see you, Alistair. So yeah, we're doing well. It's as you say, it's been a really busy year for Pan African, but overall positive, and we're excited about the future for the group.
Now, let's just have a quick catch up because it's been a little while since you and I spoke. We know that Pan African is a South African focused gold miner. It's been operating in the company for many, many years. Tell us a little bit about the assets, what you've been doing on them, what the primary assets are, and how you see it going there.
Fantastic. Yeah. So as you say, Pan African has been mining in South Africa in some shape or form for a long time. As a matter of fact, our Barberton mines complex started mining in 1886, and we still have a 20-year life on the underground. So that's really good. So that's really where things started for us, was the Barberton mines underground. And things are moving in the right direction as far as that asset is concerned. Obviously, we also have the BTRP at Barberton, which is a smaller tailings retreatment plant. And about a year ago, we managed to extend the life of the BTRP. So we now have 6 years of life remaining. But then importantly, the BTRP is also where we took our first steps in terms of tailings retreatment. You might recall we made that investment 2013 to $30 million. It was so successful, it paid itself back in 18 months. And that really demonstrated to us what could be achieved as far as tailings reprocessing is concerned. So we moved those learnings onto the Evander complex and specifically the Elikhulu operation, which we commissioned 2018. Again, that was a great success, tailings retreatment. As of today, we have about 8 years of life remaining on Elikhulu. It's a really good producer, 50,000 ounces a year, all-in sustaining cost of $1,200 or below dollars. And then we also obviously have the underground complex at Evander, where we've invested quite heavily over the last years. And investors can expect a much improved performance from the Evander underground. And then I'm very excitingly, the MTR complex on the West Rand of Johannesburg. That is our most recent addition to our tailings retreatment business. We commissioned that $130 million plant in October of last year. It's also about 50,000 ounces and then moving up to 60,000 ounces. And yeah, it's been a great success for the group, MTR. I mean, we bought the asset off a liquidator for some $2 million. So oftentimes you make money when you buy assets, and that really was the case for us as far as MTR is concerned. But also very proud of the manner in which our team's gone and executed the construction and managed to bring the plant into production ahead of schedule, below budget. So it really is good. I mean, the SA South African portfolio is now much more diversified. About certainly more than 50% of production comes from tailings in South Africa. But importantly, probably about 70% of earnings, just given the low cost profile of these assets. And then obviously, I'm sure we'll talk a little bit about Australia also, which is quite exciting for us.
Yeah, so before we sort of get into the nitty gritty detail, let's just tick off those assets one by one. You mentioned the production levels from a couple of the tailings projects, but why don't you just take us through the top? How many ounces are you producing at Barberton, and then just go through each of them one so we get a clear picture?
Yeah, we do about out of the Barberton complex, which is the underground and the BTRP, we do about 80,000 ounces, 80,000 ounces a year. From Elikhulu, we do about 50,000 ounces a year. And then from the MTR complex, also about 50,000 ounces. And then the Evander underground, which is sort of the last asset in the South African portfolio, about 50,000 ounces also. So the South African portfolio in total is about 230,000 to 240,000 ounces a year.
And so you mentioned that earnings from the tailings comprise a larger part of earnings, let's say. So what are the margins like across the board then? Barberton margins slightly lower, I assume, because you're doing primary production there. Tell us a little bit about the types of profits you're making at this gold price on the various assets.
Sure. Well, I mean, again, the tailings business is exceptionally profitable, and it's interesting. It's obviously the lowest grade. I mean, you're quite fortunate if you have a head grade of 0.3 grams per ton on tailings, and then if you do 50% recovery, so I mean, it's 0.15 grams per ton. But because the process is so simple, effectively hydro mining into just massive CIL. I mean, that whole sort of process of remining and processing is about let's say $5 a ton, which is just really attractive. So the margin from the tailings businesses is exceptional. All-in sustaining cost $1,200-$1,300, which is good. The underground is more expensive. Barberton runs at about $1,900 to $2,000 an ounce, and then the Evander complex is also about in that range. But over time, we'll look to bring down the cost at the Evander underground also.
How are you going to do that then?
Well, you produce more ounces. Already, I mean, last year wasn't a good year for the Evander complex in terms of the underground. The sub-vertical shaft, which really simplified our logistics, was delayed, but that now is hoisting properly. So I mean, investors can expect a really much improved performance from the Evander underground, and that really is the secret to lowering costs on underground, because all your costs are pretty much fixed. So you need to produce the units.
And you mentioned the mine life at Barberton at the top of the conversation. What's the Evander underground mine life looking like?
The current life of the Evander underground is just over 10 years, but it's a huge ore body. It's I mean, we have millions and millions of ounces in reserve as part of the Kinross Bay channel. It's an excellent ore body. There's nothing wrong with the Evander ore body. It's quite simply the infrastructure and logistics which we've invested in heavily over the years.
So you got plenty of time ahead of you then.
Yeah, so certainly, I mean, the base case 10 years, but can expect quite a bit more, and that excludes projects like Igoli that we have at the Evander 7 shaft, which can significantly increase the life of that asset.
So we talked a bit about underground just now, and we mentioned tailings as well. I think it's perhaps fair to say there was a certain amount of skepticism when you guys went into the tailings business, not because it was you guys, but because tailings can be quite hard. And, sometimes people say that to make tailings work, you really need to be experts in tailings. Now, it seems to me that you guys have certainly earned that title for yourselves to be able to call yourselves experts in tailings. Does it present, in your view, in your experience, particular challenges that you weren't expecting, which you've overcome, and which, perhaps encourages you to seek out more tailings projects?
Yeah, well, I think our team has done really well in terms of delivering these projects over the years. Generally ahead of schedule, below budget, and it's the same team that's executed most of our projects. So thank you, but I would agree with you that I think Pan African has positioned itself very nicely as a tailings retreatment operator. It's less volatile and higher margins than what you find on underground assets in South Africa. I mean, that's a fact. So we have decent lives on these assets. MTR has a life, when we include Soweto, of 20 years or so. So that's a long time. Elikulu at Evander can run for another 8 years. So we're in a fortunate position where we don't have to go buy anything else. But we've said to investors that they can expect some sort of an announcement in terms of an expansion actually at MTR, and that would potentially involve bringing some of the Soweto material forward in terms of production and expanding, or constructing a new circuit which then can deal with Soweto as far as MTR is concerned. So, I mean, that's quite a big positive, and that means expansion in the sort of next 2-3 years, which investors can look forward to. And yes, I mean, there would be other opportunities also. We are obviously quite selective in terms of what we take on, and we can afford to be. But we think, sort of given the expertise and the experience and track record, there will be other assets coming our way also.
I mean, in the past, you guys have been able to be quite acquisitive and transactional, and you've managed to pull off deals that have worked quite well for you. So you have that experience inside the group. And, the opportunity now with the gold price so high, presumably means that you do see projects coming across your desk quite frequently.
We do. I mean, we have a map in our office also on African gold. And when we've been to pretty much every jurisdiction that has gold. And looking back over the last decade, there's a couple of deals I think it's pretty fair to say we regret not doing. But mostly, I think given our conservative nature, it suited us well. And we've dodged a couple of bullets also. So yeah, we're in a fortunate position where we don't have to do anything. But we've continued to look at opportunities, and we're very aware of our track record in terms of sector-leading returns to shareholders, and we will not compromise on that. So our base case is to develop our own assets, and if we see a really good opportunity at the right price, then we will look at it as we've done in the past.
I mean, you characterized yourself or the company there as conservative just a moment ago, Cobus. Would you really call Pan-African conservative in the sense that the amount of growth you've generated in terms of market cap over the past 20 years is very, very significant? That's not really the mark of a conservative company, I wouldn't have said.
Well, maybe it is. That may be the mark of a conservative company is sort of being very cognizant as to the cost of equity and what investors come to expect. And that's really we do this analysis all the time. I mean, like if you do the wrong project, you will destroy shareholder value, and that's not what we do.
It has been amazing to watch, though. I mean, we mentioned a moment ago that the company's being included in the FTSE250. That's something in itself, and the fact that your assets are all in South Africa. Not many companies with associations with South Africa in the FTSE250, although there are a couple. Do you think that this is a sort of advert for mining in South Africa in a broader sense?
We hope so. I mean, so when we'll talk a little bit, hopefully about Australia also, but before the Australian acquisition, yes, all of our assets were based here. And to be fair, I mean, South Africa hasn't done itself any favors in terms of marketing the country as a investment destination, certainly not for mining. As I said at the outset, I mean, we have a really good track record, and Barberton mines being operated for more than a century. And because it's not that popular with investors, it also presents opportunity. We wouldn't have been able to acquire the likes of Mintails or MTR of 2 million ounces in reserve on surface when we were done with our work for $2 million anywhere else. So, I mean, we view it as an opportunity, and we've equipped ourselves also to be able to operate in the jurisdiction, invested heavily in terms of renewable energy, and will continue to do so. And that's going to make us even more competitive into the future. Just build relationships and have the right people in terms of operations. But the reality of South Africa, if I compare it to most of the rest of the continent, is it's a place one can do business. I mean, the legal system works, the banking system is world class. You have access to world class skills and technology, So I think our track record demonstrates that you can operate and grow in South Africa and do so successfully. And obviously, sort of the current global climate, some jurisdictions are getting progressively more difficult also. So on a relative basis, I think definitely South Africa has also improved.
Well, I suppose we could add it. There's a deep and broad skill set in the mining sector itself in South Africa as well, isn't there? I mean, you talk about the history of Barberton, but the history of mining in South Africa goes back hundreds of years, and the country is very familiar with this mining sector.
No, 100%. I mean, the good statistic is circa 50% of all the world's gold that's ever been mined has come from South Africa. It tells you something about the ore bodies.
Yeah, it's amazing to think of that. Now, before we move on to Australia, let's just talk about South Africa from a slightly different angle. You and I have talked in the past, Cobus, about union issues. You guys have got a big workforce there. You've had some issues before, but you've handled them pretty well, as far as I recall.
Yeah.
Do you have any sort of ongoing issues like that, or do you have uh, any other sort of challenges that you face on the sort of local level?
I think we've been very fortunate in terms of our relationship with our workers and employees and staff. And we generally have long-term wage transactions or deals in place. So there's no negotiation that's looming in the short term. But I have to say, I think also the expectations in terms of unions has been tempered and become more realistic over the years. South Africa recently has announced that it's targeting now an inflation rate of some 3%. It was previously 6%. So those huge escalations that you saw in the past is now way more realistic, which I think is a big benefit for the sector. Certainly for our underground mines, it's a positive. And then the fact that again that we saw such a large proportion of our production from surface, it's way less labor intensive, so we're not as exposed. But I mean, we pride ourselves on our relationship we have with employees, and we make a real positive difference in the areas where we operate in terms of economic opportunity and employment. So that will continue. So it's a good place to be from that perspective.
And what about the black empowerment side of things, Cobus? You've got a background in that yourself. How does that sit as Pan-African is concerned?
Well, I mean, our assets under the current regime is the principle of once empowered. So all these assets were empowered. So as long as we don't transfer or sell, then that will apply. There has been a draft new amendment or changes to the mining legislation that was put forward by our ministry, and the industry's commented quite extensively on that draft legislation. So hopefully, sort of our comments are taken on board, and when something does happen, the government puts forward legislation that is competitive, creates jobs, and stimulates the economy.
Yeah, I mean, I don't recall empowerment ever being an issue for Pan-African itself.
No, it's I mean, we complied, as I said, with all of the regulations, and the once empowered principle applies, which means that if you can demonstrate that you have complied in the past, then there's no current requirement for empowerment.
So you talk about South Africa being a good place to do business, and you mentioned renewable energy as well earlier in the conversation. So just before we turn to Australia, let's just sort of cover off the last point about South Africa. How is the power situation in South Africa? Are you still having blackouts frequently, and does it affect any of Pan-African's operations?
So the power situation from a supply perspective is much improved. I have to say the country hasn't had any large blackouts for quite some time. I mean, one of the reasons, or two reasons that we choose to invest in renewables is obviously that's the right thing to do from an ESG perspective, but then as importantly, we save money. So we were the first South African miner to commission large scale solar at our Evander operation. That was about 10 megawatts, and then we followed it up with a 9 megawatt plant at Barberton. We are about to start construction on another 20 megawatts at Evander, and then also looking to put up a solar plant at the MTR operation. We've also signed a power purchase agreement where we will be sourcing renewables from a third-party provider. So the cost savings on these initiatives have been quite material, and I mean that's definitely reason to continue to invest. And at the high gold price, we do have the margins to invest for the future. So, you know, once all these initiatives are up and running, it just will make us more competitive, certainly versus miners that have to run big fleets of yellow equipment, which we don't, just because of the nature of our business. We do see some localized issues still with our utility in terms of maintenance and transformers, substations, and the like, and that's something we have to actively manage. But yeah, I mean, at this point, the power issue is more of a cost consideration versus an availability concern.
So lots of levels on which that's positive then.
Yes, 100%. And yeah, it's great to see the benefit of the first two plants that we built, the one at Evander and the other second at Barberton. It saves us about 8 million rand, which will be about $300,000 per month. So that's quite material.
Amazing. So let's turn to Australia then, Cobus. You've alluded to it a couple of times already in the conversation. Going on.
Yeah, so I mean, this is an asset that came across our desks the first time, I think, in November 2023, and we started engaging with management. We sort of liked the asset, certainly the prospects of the asset, and then also the management team. And again, as we've said, we are quite conservative generally, and it took us a long time to make up our minds. But ultimately, we closed that transaction in December of last year. We felt it was, by the time that we sort of done all the work, it was really de-risked from a shareholder perspective. At the time, it was only about 5% of our market cap that we paid for Tenant or TCMG, and then proceeded to commission that plant also in May, and it sort of reached steady state in July of this year, about 50,000 ounces a year from Australia. But we're quite excited about the potential of the Tenant gold field. We own pretty much all of it now, some of it with a JV partner. And we also operate the largest processing plant to have ever existed in that field by about a factor of 3. So it's quite exciting, and there's lots of opportunity. We've retained the management team, so we work with them, and it's really been a good acquisition for us.
And what was the thinking behind it? Because obviously, your company is called Pan African.
Sure,
So
yeah.
have a little bit of a discussion inside the company about or not you really wanted to go to Australia. What were some of the factors behind making that decision?
Yeah, it's an interesting one. I mean, we'd like to think we have expertise in a number of mining related fields, just because of the nature of our business. I mean, we'll be mining 2.4 kilometers underground, geology, just given the difficult and interesting geology of Barberton, metallurgy. Again, Barberton is a site where Biox was developed, which is really excellent in terms of dealing with refractory ore bodies. So we, over the last years, kept looking at ways and means of deploying this expertise and some capital and growing the business. And as you said, I mean, Africa is logical for us because of just the proximity, etc. But our feeling was just that the political situation in Africa and just the difficulty in terms of doing business just is not conducive to sort of stable returns for the most part from our perspective. And this opportunity came across our desk, and we sort of agnostic as to where assets are, as long as we have good management teams and we are able to operate. And I mean, we found the Northern Territory in Australia very welcoming. So it's great to step into government offices in Darwin and see a genuine desire to assist. Our operation is very important to the Northern Territory in terms of demonstrating economic growth and opportunity. And I mean, so much so that actually the government provided some financing for the project, probably the biggest, I think, financing ever from their local jobs fund. So that's also positive. So we found I mean, it obviously starts with geology, and we tick those boxes, certainly from a prospectivity perspective also. And then just the ease of doing business. And I mean, we view it as a tier 1 jurisdiction for mining, which is great. And then we also have a very good team of people managing that asset for us.
Yeah, you mentioned prospectivity there, Cobus. We haven't really talked about exploration in any great detail in this conversation so far. Do you think there's a lot of exploration upside at this Australian asset?
Most definitely, it's very exciting. And I mean, to take a step back, because of our existing sort of portfolio, it's exploration, or this would be not greenfields but brownfields. I mean, that's sort of part of what we do on a day-to-day basis, defining reserves further. But we have such a huge reserve and resource base. I think our reserves is in the order of 8 million ounces, which is which is fantastic for a company of our size. So it demonstrates there's huge potential for organic growth in the Pan-African portfolio. But if you talk about brownfields, drilling and exploration, in certainly the value proposition in Tennant Creek in Australia is very compelling. So there's a lot of work that we're doing at the moment. And I mean, we're starting currently with sort of a forecast of about 50,000 ounces a year from Tennant. But we are very hopeful that in the next 12 months or so, we can put out or demonstrate a roadmap to significantly increase production from that gold field.
So where do you see the biggest upside in the company then?
Well, it's difficult to say. I mean, I think all of our assets have quite attractive upside. We also, as I said, I mean, we're busy now finalizing a study on an expansion for Mogale. That's sort of pretty much what we're used to doing. It's our bread and butter. So that'll be sort of good expansion, and expansion that shareholders can bank in the next 2 years or so. But from an exploration perspective, certainly, I think Australia is where there'll be a lot of interest and a lot of positives coming out.
So you guys come to London twice a year, I understand. Perhaps a couple more times than that, depending on the circumstances. Do you plan to be at Resourcing tomorrow, the big mining conference that's starting next week?
I won't be there, but we certainly will have a team present, and it's quite exciting. We've actually been nominated also, I think, for an award, Best ESG Project of the Year. And like, just given what we've done at MTR in terms of rehabilitation, making the area safe, and fantastic returns for shareholders, I'd be very surprised if we didn't have a good chance of actually winning. So that's exciting for us and the team that's going across, and these are the guys that were responsible for delivery.
You've got some pretty big shareholders on your register now. I think Allianz are on the register. Have you got any other notable names that you can talk about?
Well, we have a number of blue chip institutions in South Africa that's done very well out of holding Pan-African over the years. As you say, I mean, there's some long-standing and very supportive shareholders in the UK also, who's also clearly done well out of the stock, and we believe will continue to do so. But the FTSE250 inclusion and the move to the main board in London, I think, is also positive. We've certainly seen even more interest from institutions in that part of the world on Pan-African since that move was announced.
I mean, retrospectively, it seems obvious that you would move to the main board, but were there any doubts or sort of detailed discussions ahead of it? Was it a natural evolution of the company, or did you have any sort of temptation to sort of stay where you were?
Well, it's just, I mean, the company's grown to the extent where we felt it was the logical next step for us. And it was a process with quite a lot of paperwork and rigor, but we're very happy to have seen it through and to have ultimately sort of made the move.
I mean, your market capitalization not too far off 2 billion now, I think. Now, this is a long way away from where you were when you started out with the company, Cobus. Have you found it an easy transition to go into the billions rather than the hundreds of millions?
Well, I think the gray hair would probably sort of give you the answer. It's been some hard years, but overall also very rewarding for most of the share stakeholders and shareholders involved in Pan-African. As I said, people have done well, but it's also exciting looking ahead. We're so well positioned. We have, I think, so much to offer shareholders in terms of growth, cash returns, etc. That it's a good place for us to be.
I mean, you talk about cash returns there, and there's obviously plenty of cash coming into the company. You've talked about the margins as well, and growth. So what should investors look forward to in terms of their share of the cash that's coming into the company?
Well, we're paying in the beginning of December the biggest dividend that we've ever declared to shareholders. That's the dividends increased by, I think, some 80% from the previous dividend. So it really shows that the gold price is going back into shareholders' pockets, so to speak. And despite this large dividend, we should be ungeared in the next month, so no debt on the balance sheet. That's a great place for us to be. It gives us a lot of optionality. So that's a big positive.
I mean, you talk about the grey hair there, Cobus, but you're still fairly young. I mean, some of these really, really old people are still hanging on in this sector. Where do you see Pan-African sort of going from here? Do you think, the company will still be thriving in 10 years' time? And if so, what sort of an asset base do you think it'll have at that point?
Well, certainly if it's not thriving, then we haven't done our jobs, Alistair. So as I said, we're in a very good position where we have internal growth. I mean, we're growing production in this year by some 40%. Not a lot of companies can do that. And it just provides us with a great platform to go and do more of what we're quite good at, which is sort of expanding our existing operations and then waiting for those opportunities and then successfully executing when the opportunities do arise.
Well, it's been great to watch you guys grow and grow and grow over the years, Cobus. I know you've got to go off and do some more important management business now, so I'll let you go. But really great to catch up with you, and I hope we can catch up again soon. Well done.
No, Alistair, thank you for your time, and we look forward to speaking soon. All the best.
All the best to you.